Good morning, everyone. So I think our co-speakers Manoj and even Anil have set a very good stage. So what I'm going to do is a little bit more of amalgamation of both their thoughts. But for a moment, I'll take you all on a journey in a global level. So I'm not going to talk much of India GST because you guys are expert in these rules, and I know we had enough of learnings, experiences of that. So I would want to start with this. So we all know the person with one of the highest IQs on the planet ever lived was Einstein. So Einstein is known for his physics work from a theory of relativity and etc. But even Einstein is baffled when he was introduced to the concept of income tax. I would still say he was lucky enough he was not introduced to GST and even the global indirect taxation, because then he would have changed his statement altogether. So now let's dive in a little bit more of a world of tax complexity, more from an indirect tax perspective, ladies and gentlemen. I would want to start with one of our favorite destinations. So like our keynote speaker was mentioning about it from a curriculum perspective of India and etc. Today we talk to any new age kids or the millennials. What is the first thing they do after their engineering is, I want to go to US. And that's our dream destination, be it business or be it education for that matter. So when it's for education, it's fine, we get easy visa time. And on a funny note, I just went to a different country to get my US visa last week. Because in India, I had to wait for around 300 odd days to get my visa slot. So that's the kind of a craziness we have in India from a US visa perspective. So, but when it comes to businesses, there is a lot of non-cognizance with respect to the indirect taxation. So on this note, let me ask a small question to the august audience over here. How many of you really feel that India GST or Indian taxation system is more complicated and complex? Okay, that's a decent check. So let me introduce you to the real complexity at a global level, sir. That's United States for us. So whenever you do business in the United States, depending upon the nature of the product you are selling and the parties you are transacting into and the location where you are in and the nature of transactions which you have between the people can determine your entire taxation. So in the United States, the common indirect tax regime is about sales and use tax. But of course, there are quite a lot of variances in that one when you do a B2C transaction or when you do an exempt transaction, or someone would say, hey, I'm dealing with governments, then the taxation rules are different completely. But if you are selling products related to energy, petroleum, or tobacco related products, then the taxation is completely different. And we have seen a surge in the OTT platforms which are operating out of India and across the globe. Now we are talking about, and thanks, I would say that's the positive side of the COVID is like, Netflix and Amazon have raised their subscription phenomenally. They've raised the price and their base is also grown up. They are turning profitable. That's a good sign, right? But the flip side of it is, there is also a communications tax which these people have to really enroll into whenever they are entering into the United States. 21 states in the entire United States make it a mandatory for the company operating within those particular states, even if they have one subscriber, even if they are trying to raise one invoice. And that goes beyond when we are talking about companies like Airbnb, now Oyo, which also set up their shop in the US, they are subjected for lodging tax over there. So what makes US complicated? So while we heard our colleague Anil a moment ago about the kind of notices and everything coming up, so US is complicated by nature itself. It's by nature of its geographical establishment. There are around 15,000 jurisdictions in US, and it can also be a scenario where we currently sitting in Egmore, let us suppose, for a moment, let us assume this is US. It's fantasy world, right? So let us assume, now we have we just procured a product and we have been charged about $10. But someone sitting probably just about like 1,000 meters or 800 meters from here can also get a similar kind of, can get a different taxation altogether. It is not just because based on the zip code or the pin code we talk about, it's more about your latitude and longitude mapping which would really determine. So that's why companies with accurate tax determination, would strongly recommend you to get exact location where your sale is happening, because your exact location can really determine accurate tax. Else you will be giving a very overall high level kind of taxation. So in 2022 alone, I'm going to reveal the number over here in a moment. But before that, I also want to ask our GST experts in this room, so how many changes we have really seen or experienced, be it kind of notices or other things, in 1 year, in 2022? Any number? No, sir. In fact, in GST have given about 4,900 and odd notices in 2022 alone. But now let me ask you this question. We just talked about 50,000 jurisdictions, around 50 states in the United States. How many would be the tax changes we can expect? A random number, please. A million. Oh my God, sir, you made the complexity into a next level altogether. So, I mean, I'm sure like the way the businesses are progressing is going to reach the number, but definitely not that much. So let me tell you, sir, only in 2022 alone, there are rate and taxability updates of about 260,000 in United States in 1 year, sir. And about 122,000 US sales tax holiday updates which were given. And the tax holidays updates are also around 36% of businesses operating in this tax holiday kind of purview, they weren't even aware, because the tax holiday just completed yesterday and they started making it effective today. And the result is non-compliant, because the governments don't really accept non-compliance. So with United States, if that is a kind of complexity, and then I'll just take a quick flight towards the European Union, where what is happening in European Union? Post-Brexit, there is a lot of geo-locking which is happening. Everyone wants to simplify VAT. There is also a new project which the EU is working on called as VIDA, which is VAT in digital age, where by 2030 they have an aspiration to bring all of the domestic transactions under the purview of e-invoicing across the EU. And e-invoicing is rampant. Now, in a moment from now, I'll also be showing you how each country is planning their e-invoicing journey and by when. You would be surprised, the chart is already chalked till 2030. There are countries who are so aspirant. When we are starting our e-invoicing journey, so in fact, we drew inspiration, a little bit of an inspiration from Poland at that point of time, because Poland was talking more of a SPPOL standard, and we also started taking some inspiration from that from an e-invoicing. But at this juncture, I just want to praise Indian authorities, because the way they have rolled out the e-invoicing is second to none. Ours was a smooth enrollment of e-invoicing, where we quickly moved on phase 1, 2, 3, 4, and now we have reached the penultimate stage, at least from a business's perspective, because now we are about only 5 crore and above in turnover. But Poland is still planning to do it in 24. And data-driven enforcement, the GDPR regulations have taken at the helm at this point of time, because it is important for them to hold their data and their data privacy in their respective geos as well. So if you look at the global trends in tax reporting, the figure is a little old, and now in 2023 there are a couple more countries which have joined the league from an e-invoicing perspective. It's an upward slope which you are looking at, because the mission in front of the European Union is to reduce the VAT gap. So they have close to 100 billion euros when the Brexit happened, is the kind of an ambition they have. Now they've just knocked up close to around 10 billion, and others, they still see a goal of around 90 plus billion euros of VAT gap to be filled. And what is the easy way to do it? E-invoicing is the easy way to do it, because you're going to record every transaction in and out. And so there is a transparency when it comes to the businesses. So now we looked at a little bit more from the United States. I told you about the chaos as usual. I'm also giving you a brownie at the end of my session on what's going to happen in US as well. And we talked about EU a bit, and Asia Pacific is picking up strong with e-invoicing, with Japan making its strides with PayPal in mid of last year from October 1st, 2023. So they are becoming effective, and they started bringing in more procedures in place to get their e-invoicing intact. And the good news is Malaysia is starting up from 1st of August 2024, where they are starting with large companies with about 100 million ringgits to be the first one to start with. They are also adopting an Indian phase of e-invoicing from phase 1, 2, and 3. And the leader in e-invoicing is anytime the South American countries. They have really shown the path for the globe that what is the best result of implementing a strong e-invoicing procedures. So if you look at it, world at large, ladies and gentlemen, so we see a lot of chaos, and you can also see a lot of impact when it comes to e-invoicing as the key initiative across the countries. So I'll just touch a little bit on cross-border, because as a part of our day-to-day interaction with quite a lot of retail brands, out of which some of them are present in this room at the moment. So what we've seen is the total amount of trade when it comes to consumer goods and retail goods from India into the US is above $40 billion US. This is the data from the Bureau of Economic Affairs of the United States. And I'm surprised to see this, because all these days I was thinking like, India is the dream destination when it comes to services and information technology for the United States. But the fact is, the IT and services are about like $33 billion, but while the retail is the big winner here. And of course, I'm discounting materials like minerals and other resources out of the equation. But when we really do a comparison, retail wins the game. But are retail companies operating out of India are being compliant? I must say this, around 8 out of 10 retail companies trying to do business out of India into other countries are non-compliant. It is not just because of their willful activity, it is because of their non-competence. I'll give you a classic example. Whenever we do an export, so by and large, the mindset of the Indian trader whenever they're shipping into other countries is, I've raised in GST invoice, it's export, 0%, that's it, taken care of. But there is an activity which is where you need to determine taxes, whether it is duty, delivery, which is like delivery at place, or it is more like duty already prepaid sort of a thing. So many a times brands prefer giving it as a DAP shipment, so that they would pass the liability of the duty to the recipient when they are receiving the product. But if you see the real economics or the data from logistics companies, and this is also released by the European Union, because what they found is they found a pile of products which are less than 5 to 6 euros in that range, which are just being stacked in their containers, the shipments at the port of clearance, just because they were returned. The cost of the product is 5 euros when I'm being marketed it. So I purchase it at 5 euros, and when it is being delivered, they would say like, you got to pay another 4 euros extra because there is a duty and there is also local tax involved in it. So the returns have increased, and the cost of bringing that product from that territory back to India is double the investment which they are making. So this forced the European Union to reduce their de minimis from earlier 22 euros to 0. And they brought in a new concept called as IOSS, which is Import One Stop Shop. So if you are a B2C shipper and your product is less than the cost of 150 euros, and you have a waiver of your duty if you have a IOS registration, and you get a green channel clearance so that your shipment is cleared immediately, and all you need to do is to raise the VAT along with the invoice and file one return to satisfy all 27 countries. That's a simplification, but the simplification came at a cost equally. And what is a major problem what people do in here is, number one, we are more fascinated because cross-border will give us more mileage when it comes from a return perspective or from a turnover perspective, and there are lucrative numbers flowing all around, close to trillions of dollars is what the entire market is being worth at this point of time. But the most important thing which people miss is the kind of the HS code classification which they need to do. Now, the HS code has just revised in 2022, where there is kind of changes in certain kind of chapters and even in the product sections. I'll give you a classic example. So this seems to be a sandal, and this is a case which we have encountered with one of our eminent customers. So the universal is 6 digit, So good that India accepts 4, 6 and 8 digits, so then we are sorted. But when you go to Australia, the same sandal is about 10 digit, and in United States it's 10 digit, and Japan is about 9 digits. But what would be the impact from a duty perspective? Look at it. What would be the kind of a duty rate we'll pick up? If you are charged 5% for the product which you are shipping into the United States, where the de minimis is about $800, then you are non-compliant. Or if you are charging it at 30%, then you are just losing your revenue. So this is a classic case when it comes to the Europe. Looks like it's one bag, but if it is a travel bag, based on your description, the HS code is different. And when it is a music case, which is also considered, and others, then the HS code is completely different. But look at it, the duties. So accurate HS code determination will heavily impact your compliance journey in the respective countries. If you have under-collected, you are non-compliant, like we have told you. So there are scenarios like physical presence, especially in United States, they call it as nexus. Even one of your employees travels to an event over there in a state like Texas, just they've attended a conference like this. So the Texas government can slam a notice on your organization name saying you have triggered physical nexus, you must get a sales tax registration. Your transaction volume. Now good news is that many states are moving away from the volume kind of a threshold. They are more adapting the value threshold, which is average is about $200,000, and states like California, Texas and New York are about $500,000. Marketplace sales. People say I'm selling on Amazon, I don't really care, so Amazon takes care of everything. But the real aspect is Amazon is not the importer on record for your goods. So they would still say hey, you need to get a non-resident VAT registration, or you need to get a sales tax registration, because I cannot take the legal liability of your goods. And I might be storing my goods in a warehouse in Michigan, but by definition of United States, I am triggering physical nexus where I need to get myself registered. And even remote. So we have people trying to do this kind of business from a remote thing, more like lead generation or development activities. Even that can trigger your physical nexus. And business visits, like we have told you. So luckily my company is also registered in US, so my business visit does not affect the sales tax registration over there. So we also had a small research with the kind of companies who are already dealing with this. So we found some interesting responses. So we just tweaked it a bit for the ease of convenience. Around 50%, they really believe they are absolutely God-loving people. They will say God will take care, I don't have any problem. So let's just go in. And I have one recent case where they were doing business since 2016, way before the Nexus emerged in the US. And they were doing about close to $15 to $20 million every year. And then they said I didn't receive any notice so far. मुझे कोई notice मिला ही नहीं है. Said very good. So soon we're expecting that they'll get it, because at that point of time they'll move to the next stage. Is this true, God? No, I believed you. So I went to Palayarpati temple and I've given all this kind of a thing, but still why I'm getting this. And the 10%, then now the heat starts picking up. It is, oh my God. And we have an Indian DNA, right? We tend to do some kind of relationship building with the authorities, which happened earlier. I know it's not happening at this point of time, but then this comes, let's do some jugaad. So is there something we can do it with American authorities? So I don't want to name the company over there, but one senior level professional in a company asked me this question: Krishna, I'll just go to that state and they say I am from India, I don't know about your law. What will happen? And another gentleman said I'll do one thing, I'll scrap my existing entity in United States and I'll open another entity. So, but my simple question is whenever you open a new entity, are you going to still call it as an Indian subsidiary? Right? So, that means you have clearly left your trails so that the investigation can be on, and most importantly, you are just complicating things further and further and further instead of pacifying it, which is to be done immediately. And last 10% is help me God. That's where the penalty comes, notice comes, non-negotiable, and with decent amount of value on the notice. So I'm just going to give a brief on why you should read it. One, with the constant change of governments with aggressive policies, they're coming up with new resolutions every day. So some states have decided that we are going to scrap all of our transaction volume, like the way I mentioned a moment ago, and marketplace laws are constantly being changed, and global tax is picking up because companies want to make tax digital. After Brexit, the Great Britain have decided to make every of their filings MTD, which is making tax digital. And as of November 2023, they were still expecting close to 1 million businesses who are operating into the UK are not still ready for that one yet, but still they have enforced heavy penalties on it. And virtual audits, COVID forced the people to go with virtual audits, and people think that virtual audits are going to be simpler. But let me also tell you this: it is simpler when auditors travel to your locations, because they know they can't spend much time. They'll do it in probably in a day or two, and then they just move out. But when they have virtual audits in time, they have their entire time on the planet to look into every transaction. Here is a classic case. One of our customer was sharing this with me. So these people operate and they do business with American Airlines. And when American Airlines audit is being done, so the auditor found that there is a lot of transaction happening between American Airlines and an Indian entity. And out of inquisitiveness, he went back and he started looking at Indian entities' sales in US. And never ever this Indian entity registered in US because they were saying it's an export invoice and they're doing it. But the remote seller definition in United States call for even if you're selling from the other state or even any part of the world, you are still a remote seller. And they slammed notice to this Indian company, saying you're doing business for quite some time, and we found it in American Airlines audit. So now please come back with an explanation on why you shouldn't really get registered over here, and what is the reason why you couldn't really get it registered earlier. So they had to file a voluntary disclosure agreement and then get it sorted with the registration, etc. So government is way smarter than us, ladies and gentlemen. And finally, this is the map which I just told you that I'm going to publish in a moment, which is about the multiple countries and the way they are going in. So can you imagine Romania, which is a small country, so they've started giving penalties of about 1,000 euros to 2,000 euros for large companies for non-compliance of e-invoicing. And at least they went a step ahead. They are not talking about real-time invoicing. They are giving you a window of 5 working days post the date of invoice to get your invoice recorded in the national invoicing system. And if you are a mid-sized company, it is about 500 to 1,000 euros. And if you are a small, it is about 200 to 500 euros is a penalty. And same is the case with Poland, Malaysia, and other countries as such. Finally, I'll go back to what I'll echo with Manoj's thoughts over there about people, process, cost, and technology. These all are a combination which will really drive efficiency with your organization for adopting automation. And lastly, I just did a small search on ChatGPT, which is the norm of the day. I just asked a very interesting question, what is your role of tax technology in managing global compliance? And I think, all the pointers which are covered by Manoj and Anil and me are just coming there. So that means we are spot on, gentlemen. So that's the need of the hour now. And then I think it is time that you got to empower your businesses with technology. And the CFO office is not a tax back office or a finance back office, it's the strategy office. So CFOs are key strategic enablers in determining the growth and phase of the company. With that note, thank you very much. And a small sneak peek about Avalara. We are a global tax automation company operating for about 2 decades now and supporting around 100,000 customers across various tax types. We support taxonomies of 193 countries and very focused on indirect taxation. So me and my colleagues are there over there, right across outside in the podium over there. So feel free to drop in. We would love any kind of conversation with indirect tax, but spare us with direct tax because that's not our forte. We see there is a lot to be done in indirect taxation. With that note, thank you very much for patient listening, and I hope I've added some value to you with this session. Thank you.